Good morning everyone. Is anyone there? Thank you for this comment. Very good morning. I hope you all are doing good. So today we have something different, right? Our RBI annual report class will happen maybe tomorrow or some other day. But today we have started this series, we will be having 80 top MCQs, okay? 80 top MCQs which are the most probable, okay, from the ongoing trend, ongoing current affairs regarding your Indian economy for UPSC civil services examination, okay? So here we are targeting the civil services examination preliminary paper, okay? So these are the set of 80 most important MCQs for you, which we will be covering up in parts, right? So it will help you a lot. Just try to understand all these trends. And one thing which I need to discuss with you before moving ahead in the analysis and question answer discussion of this session. First thing, you need to understand that when we are targeting a particular exam, you have to understand the requirements of that particular paper, right? We study economics for SEBI, for RBI, for UPSC, but the questions being asked are different. So when we are targeting the questions of economy for UPSC CSE Prelims, you should remember you have to focus less on the facts and more on the trends. Are you getting my point? Less on the facts and more on the trend. UPSC has asked questions from trend based part as well as from application based part. It does not ask you fact like what is the repo rate. No, if it has to ask the questions, it will ask you like this, okay, you are given with an inflationary situation, what is the most likely step which MPC or RBI will take to contain that inflation? Will it reduce repo? Will it increase repo? These kind of questions will be asked. So when you target whosoever among you are appearing in 16th June examination, first of all I wish you good luck, and second thing, you have to focus on the trend based and the application based portion. Application is also very important, and less focus should be on the factual part for UPSC particularly I am talking about. Is this clear to you all, right? So here the questions which you will see are also based on the previous year papers trend of the UPSC examinations. Since recently that different kind of new options have been introduced, like only one, only two pair based questions, right? Only one pair is correct, or say only one, only two, only three, only four, like these kind of questions. So you have to be sure about each of these statements. Otherwise, earlier you could have eliminated them. Are you getting my point? So this is the new difficulty which is in front of all of us. But anyways, we have to clear the exam, right? So we accept the challenge and we will find out our ways, right? So here let's begin with the question and answer discussion. These will be very important. The topics covered here will give you hint that okay, you can see a question from these topics, okay, and you can practice the trend based question to remember the trends, that is service export rising in India, is merchandise export falling in India, what is these trend, okay? They are not going to ask you the volume, the percentage, no, not at all. UPSC doesn't ask the facts, pure facts, okay, clear? So I hope you all are very enthusiastic about it. Let's begin and be interactive in the class. Try to give the answers, okay? No matter they are right or wrong, just try to be interactive. So these are your most important 80 MCQs set, okay, of Indian economy for your UPSC prelims, which is scheduled to be held on your 16th June, okay? Now, here is your first question on the screen. First question on the screen. So this is your question. Which of the following is correct regarding exports from India? Always remember, you should, while reading the questions, because the exam happens in an offline mode, right? So you are provided with the question paper, although it is not allowed to mark, but you can mark slightly so that you should remember that is correct being asked or incorrect being asked, right? So remember, otherwise what happens is you know the concept, but you mark the wrong answer because you get confused between correct and incorrect. So first thing you should remember is this, okay? So here you should understand that correct regarding the following statements has been asked. Okay. Which of the following is correct regarding exports from India, right? So exports have been targeted. First, petroleum products have the largest share in exports. So the question is talking about exports from India, exports going outside from India. So first thing is, petroleum products have the largest share in exports. Yes, okay. Then USA is the major destination of Indian exports. You should tell me, okay. You should tell me the answer. I am just reading out these statements for you. Third is, in terms of value, service exports are higher than merchandise exports. Service exports are higher than merchandise exports. Which above all these statements is or are correct? Tell me. What should be the answer? And the options you have are based on the latest pattern of UPSC, only one, only two, all three, or none of the above. Okay, so I have got the answers. C, B, all three. Okay, let's see. First statement, that petroleum products have the largest share in exports. Is it true or is it false? Tell me. As you all know, what is the trend of Indian exports, constituent goods of Indian exports? Petroleum products have a very, very substantial amount. Yes, it is true, okay, in the export. So this statement is correct. Second, USA is the major destination of Indian exports. Yes, it is also correct. Major destination has been asked. Largest trading partner is not asked. Okay, so remember the difference, that USA is the major destination of Indian exports. Okay, largest trading partner is China. There is a difference between these two. Got this point? Okay, so major export destination is US, largest trading partner presently is China, which has replaced US. So remember the difference. Second is true. Then in terms of value, services exports are higher than merchandise exports. Is it true or false? As you all know that India has a services surplus. Okay, in terms of services, trade of services, we have more of exports than the imports. While in case of merchandise, in case of merchandise trade, we have a negative trade balance. Negative trade balance means we import more goods as compared to export of the goods. Getting this point, right? So in terms of value, services exports of India have grown a lot, right? We are exporting more services, so that should be true as compared to the merchandise exports. In merchandise exports, we have a negative trade balance. Clear? So your answer here should be C. C should be the answer, which is all three are correct. Okay? C should be the answer, all three are correct. Got this? Now there are certain facts related to these questions which I'll be sharing with you so that you get to prepare the entire topic. Alright? Number 2 is not matching. Which one is not matching? USA is the major destination of Indian exports. Yes, it is true. Major destination of Indian exports is different from having a largest trading partner. Do you get that point? So major destination of Indian exports is US, but the largest trading partner of India is China. So you should not get confused. Therefore, I told you the difference earlier only. Got this point? Okay? All good. So C is the right answer here. Now let's discuss some extra facts related to the news, to the question, so that you can prepare the topic entirely, right? Now, as you can see here, that petroleum products have the largest share in exports. This is the explanation given to you. USA is the major destination of Indian exports, right? Gujarat has the largest share in exports. This is something which you should remember, a fact, okay? Gujarat as a state, so out of all these states and UTs in India, Gujarat has the largest share in exports. Is this clear? Right? So you should remember this. This kind of information might appear in some statements given to you in the questions. If you are tracking the previous year questions of UPSC, if you have attempted or seen the question paper of 2023, they have asked a lot of facts. Okay, that's why many of the good aspirants which I know, personally were not able to qualify, since they have put in so many facts into one statement, and there were 2-3 statements, and then the options were like this. So it got them confused, get confused, and that's why they lost their marks. Okay, so you should remember these facts so that you can attempt these kind of questions, right? So Gujarat has the largest share. Then in terms of value, if we talk about, services exports are higher than the merchandise exports. Okay, this was your first question. Moving on to your second question. Second question, which of the following is correct regarding imports in India? Okay, so now since we have talked about exports, now we have imports. Petroleum crude or crude oil has the largest share in imports. Russia is the major source of Indian imports, not exports, imports. Electronic components, the electronic gadgets, chips, all the electronic devices have the highest share in imports from China. Which above them are correct? Tell me the answer. Question number 2, answers please. Question number 2. Any answers? What do you think should be the answer? A, B, C? So here if you see this statement, petroleum crude has the largest share in imports. Yes, as you all know, 1 and 3 are correct. Okay, so answer should be B, right? First is that in imports, total imports which we do as a country, petroleum crude has the largest share. Yes, petroleum crude is something which leads to higher import bill, okay, or greater import bill for us. Getting my point? First thing. Then second is Russia is the major source of Indian imports. This question is asking you from which country are we importing the most. Getting this? Okay, so it is not Russia, it should be China. From which country are we importing the most? Okay, so it should be China. This is wrong. Electronic components have the highest share in imports from India, from China. Yes, so all the imports which we do from China in our trade relation with China, among all the products which are imported from China into India, the heaviest share, the largest share is of electronic components. Okay, that is why there is a debate and there is a continuous effort going on by the government of India to expand our own domestic production in electronic components and gadgets. Getting my point? So as to reduce our dependency on China, because it is causing us a huge import bill. Getting my point? That's why if you follow government policies, government is continuously focusing upon semiconductor industry. Now you know that we are expanding our scope, our production in semiconductor, okay, because since China dominates the semiconductor market, we are also dependent on imports from semiconductor, which is also an electronic component used in automobiles and all these kind of industries, right? So India has this policy. We want to reduce our dependence on China in case of electronic components. So this is also true. Got this point? Now let's see. So the question asks you how many of these statements are correct. Again, correct is asked. So in this case, B or the Russia one being incorrect, the true answer should be only 2. So the first one and the third one is correct. Now let's see the explanation. First, petroleum crude has the largest share in imports. That's true. China is the major source of Indian imports. Got this point? Not Russia. So the country from which we are importing the most is China. So that's why second was incorrect. Electronic components have highest share in imports from China. That is also correct. This is incorrect. So your answer is B. Only 2. 2 statements are correct. Right? So this was the answer. Now let's see some related facts of the question. Some related facts which you should know, because direct questions do not come in the examination, as you know, right? We can have some parts of these statements, these facts which you can see in the questions. Okay, And one more thing which I want to tell you to all the serious aspirants, a genuine advice, try to focus on which the government is focusing, right? Why do I say that? Because overall the UPSC is not going to ask you that okay, in semiconductor where we have established the plan, how much crore outlay is government is planning to give to the semiconductor industry. No, all these questions are not going to be asked. They will ask on which areas government is focusing. They will ask you trend based questions. So focus on the trend, on which objects, on which services, on which goods like palm oil, vegetable oil, okay, like semiconductor, government is focusing, millets. So these should be there, so you understand what is the tone of the statement. Is it negating the fact that government is focusing upon them? Then it would be incorrect. Or is it accepting the fact that government is focusing on these things? Then it would be correct. Right? So always follow the trend in economics. I always say that. Don't rush behind the facts if you want to qualify the prelims, right? Now, the related facts which you should remember regarding imports is, the related information is like this. Asia region is the top destination of Indian exports and imports, right? So our exports and imports of India, the top destination if we talk about in terms of continent is Asia. Okay, in terms of country, when we talk about exports, that would be USA. Russia is a major source of crude petroleum, followed by Iraq. So if we talk about the major source of crude petroleum, from where are we able to get the most crude petroleum which we are importing? Is Russia. Okay. So for India, Russia is a major source of crude petroleum. Second one is followed by Iraq. Okay, and this data is for the financial year 2023-24. And rest assured, all these informations, facts, trends, data which are there in front of you have been taken from authentic government websites, right? So you can trust them. And I always say to all the UPSC aspirants that your sources should be very authentic, right? If you are searching for any economics related data, that should be either RBI website, Ministry of Finance website. So official websites you should trust upon, or NCRTs, right? Because when there is a confusion between two options, UPSC is not going to refer to any website. They are going to refer to official data. Getting my point? So this is the related information. One more thing, that merchandise exports are less than imports by value. As I told you that India has negative trade balance in merchandise. What do we mean by merchandise? See, we have trade in goods as well as services, right? So merchandise basically means your goods, not services. So you should remember this trend that in India, the goods trade balance is export minus import. So in case of goods, we are exporting less and importing more. So it is a negative trade balance. We have to pay more than the amount which we are earning, isn't it? Second thing, in case of services trade, if we talk about the services trade of India, India has a positive trade balance in services, which is to say that we export more services than we import them. Clear? So you should remember these two trade balances of India. So merchandise exports are less than imports by value. Okay. So we have a negative trade balance, negative merchandise or goods trade balance in India. Clear? Then services exports are higher than imports, so we have a positive trade balance, as I have told you, right? So services we export more as comparison to importing of services, right? So in services we have a good hold over the trade. So trade is in our favor in terms of services. Then the next is India, this is also very interesting information which you should remember. India has the highest negative trade balance with China. You should remember, but this is not good on part of India. We need to correct this trend. It shows that we are heavily dependent on China. So the country with which we have the highest negative trade balance, that means from that country, from China, we are importing more and exporting less. So we are paying more to China than what we are earning from China. right? So this is a negative trend which India wants to correct, and government policies are there trying to do this thing, okay? Then India has the highest positive trade balance with US. If we talk about positive trade balance, more exports than imports in goods and services, then the country would be US. Clear to you all, right? Just let me know. Are you able to understand all these trends? Yes or no? Very quickly. Yes? Good. So remember this thing. Okay. Now question 3. Question 3 is asking you regarding foreign direct investment. We all have discussed FDI, FII, FPI in all our previous editorial classes, in RBI annual report, right? So you should be able to deal with this question. Now, which of the following is correct regarding FDI in India? So again, correct is being asked. FDI inflow from Mauritius is the highest in last 3 years. Computer software and hardware has the largest FDI inflow in India. Cumulatively, services sector has the highest share in FDI inflow from April 2000 to March 2024. So these are the statements. Which of these statements above are correct? This is the question. Tell me the answers. These are your statements. Which of them are correct? So you are saying 1 and 2. I would appreciate if you tell me A, B, C, D, right? Because otherwise it becomes difficult to understand what you are trying to say. A, B, C, D. Okay. You are saying B. And for specifically you are mentioning 1 and 2. I understand that because 2 means any of the 2. That can be 2, 3, 1, 2, 1, 3, right? Okay, so you are saying B is the right answer, 1 and 3, and someone is saying 1 and 2. So let's see. Okay, first thing, computer software and hardware has the largest FDI inflow. That is true. So FDI, which is coming into India, as you all know, foreign direct investment is some entities, individual directly investing into, say, assets. Okay, they are having ownership of the companies and all these things. So when FDI is coming into India, the components, if we talk about, which are attracting the highest FDI in India are your computer, softwares and hardware. Clear? So it is true. Third is cumulatively services sector has the highest share in FDI inflow. This should also be true. Okay, the statement which I have doubt in is FDI inflow from Mauritius is the highest. It should be Singapore rather. Okay, so earlier it was Mauritius, but now it should be Singapore. Okay, so let's see. The answer then should be your 2 and 3, right? So first is incorrect. As I told you, it should be Singapore, right? So FDI inflows from Singapore are maximum in India since last 3 years if we talk about. These are pure trend based questions, and UPSC has asked these questions if you see the previous year paper, right? So you should remember from which country India is receiving the maximum FDI. If we see a trend of past 3 years, that is Singapore. Okay, earlier it used to be Mauritius. Clear? Second, computer software hardware, as we have discussed, true, and services sector has attracted more of FDI in India as compared to other sectors. So 2 and 3 being correct, answer should be B, which is only 2. 2 and 3 being correct, answer should be B, which is only 2. Okay. Clear? Right? Let's see the explanation and related details. So here, as you can see, the answer is B. FDI inflow from Singapore is the highest in last 3 years. So FDI inflow from Singapore is the highest. Computer software and hardware has the largest FDI inflow. That is the true statement. Cumulatively, services sector has the highest share in FDI inflow. That is also true. Okay. Now some extra information which is provided here to you is, so this was related to your questions only. Now extra thing is cumulatively Mauritius has the highest share in FDI inflow from April 2000 to March 2024. But but it is cumulatively. If we see overall FDI inflows incoming from the country, Singapore will be the answer. Okay. Now, so earlier it used to be Mauritius, then it was replaced by your Singapore. Maharashtra. If we talk about the state, which state in India is attracting the highest ever FDI? Which state in India is attracting, has constituted, say, maximum stands at the top in FDI inflows is your Maharashtra. So you should remember this information. This is also very important. Maharashtra has the highest share in FDI inflow in 2023-24 we are talking about. So latest data, and from April 2000 to March 24. Remember, okay? So Maharashtra has the highest share. Clear? So if they ask you which state has the highest share, that should be Maharashtra. Clear? Okay. And there is important report given here which you should remember. If you see the previous year papers of UPSC, CSE Prelims, they have asked reports, although this trend has now been diversed somewhat, to somewhat extent. Why am I saying somewhat? Because you know there is no trend in case of UPSC, right? You cannot say that this is the trend, this will happen next year. No one knows. They are very uncertain, right? If you have seen the 2023 paper, it blown out the minds of aspirants, right? They were like absorbing shock for the initial 5 minutes of the exam and then trying to attempt the question paper, right? So you never know about the trend or the questions being asked in UPSC, but still we have to prepare on some practical grounds. We have to speculate what all can be there in the examination, right? So these kind of reports are always important for you. Whichever report is there in the news at least is important, right? The organization who publishes it and the report. Also remember one thing, the schemes, their ministries, reports, their publishers, initiatives launched by whom, all these kind of questions are asked, still being asked in prelims examination. So that becomes important for you, right? So here one report is mentioned, World Investment Report, okay, World Investment Report 2023. You should remember who releases it. That is more important. So it is released by your United Nations Conference on Trade and Development. So UNCTAD as we say, okay. So United Nations Conference on Trade and Development has launched World Investment Report, and that report has given some facts which we are going to discuss, right? So first remember who has launched the report. Second thing, related facts which we need to discuss. First is India was the 8th largest recipient of FDI. That is a good situation for our country. Why? Because if we are attracting more FDI, that shows that investors are having confidence into Indian economy. If investors are having confidence in Indian economy, it is a symbol of our own economy's strength. We are growing robustly. We are having a very exuberant share market. If you are following the RBI annual report classes, which I have been taking, I think 4 classes I have taken. So if you are following those classes, you know very well that what is the trend going on. Indian share market, market is performing well. Equity market is exuberant, right? So we are attracting FDI inflows, all right? And India is the 8th largest recipient of FDI inflows. That is congratulatory on part of Indian economy, right? We are doing good. Then India is 3rd largest host country for announced greenfield projects and the 2nd largest for international project finance deals. You should remember this thing as well. So 8th largest in terms of FDI inflow. Then if we talk about the greenfield projects, so India is the 3rd largest host country which hosts the greenfield projects. What are greenfield projects? I have told you in many of the classes that FDI which comes into India can be classified on 2 bases: automatic route, government route, on the basis of approval required, and greenfield and brownfield, right? So when we talk about greenfield project is any project which earlier did not have any existence. So it is a fresh start, starting from the scrap basically. Getting my point? And brownfield investment or brownfield FDI is FDI in those projects which are already existing there. Say some company is already there, you are doing FDI in that company, you are investing in that company, say in assets, in machinery, anything. But it is already in existence, that would be brownfield. If your FDI, your investment is starting something afresh, that would be your greenfield FDI or greenfield project. Is it clear to you all? Right? So India stands third largest in greenfield projects and second largest in project finance deals. So very recently I have discussed, I think yesterday only in our editorial classes we have discussed project finance, right? Yesterday or day before yesterday. What is project finance? Project finance are those projects, you know, the long term, basically long term projects, industrial projects or commercial projects whose funding or paying back of loan has limited resources. To be very particular, these kind of projects are those projects for which the whatever funding you have done, you have taken loan, equity, right? All these things are to be paid back using the funds or revenue generated by the project itself. Remember. So this is very risky. Okay, and since you know we have discussed, RBI is becoming very strict in terms of provisioning of project finances. We have discussed all those things, right? 5%, banks are now required to keep 5% of the loans given to project finances as provision to create a buffer, a safety buffer, right, for the banking liquidity. So we have discussed all these things. Project finances, now you will remember. What are project finances? These projects, the repayment of loan and all these things of these projects is done by using the revenue generated by project itself. Remember this thing, basic definition. Okay. So this is the information, very important information given by reports. If you see past 2-3 years papers, international reports, initiatives have been asked in the prelims examination related to environment, related to these projects, right? So these kind of questions are there in the prelims if you see the trend. Alright, so it would be helpful, I hope so. Then question number 4 we are moving towards. Now this is something which you all know, and I have also taken a class on GST in one of the editorials. So which of the following is correct regarding GST? Try to attempt the question. Under GST law, export of goods or services has been treated as zero rated. When I took the class of GST, I explained all these points to you, right? So I hope you will be able to answer this question. Exports are zero rated, interstate supply covered under IGST Act, first statement. Second says, all imports shall be deemed as interstate supplies, and accordingly integrated goods and services tax shall be levied in addition to basic customs duty. This is the second one. Third statement says, Central Board of Indirect Taxes and Customs, CBIC, under Department of Revenue, Ministry of Finance, is responsible for formulation of policies relating to collection and collection of indirect taxes like customs duty, central excise duty, central goods, services tax, all these things. So which above them are correct or which are incorrect? Which above them are correct or incorrect? Brownfield projects are those who have already received funding in terms. Yes, Shreya, right. So that's what I told you. Brownfield are already there. They have received funding. They have started operating, right. So it is in existence. You are adding to it. Greenfield projects are just starting from scratch. Okay. So I have got some answers. A and 3 are correct. Let's see. 1 and 3 you are saying. Let's see. I'm waiting for more answers. Anyone please? What should be the answer? Correct statements are asked here. How many of these statements are correct? We have done GST in editorial classes as well, so you should try attempting this question. Yes, anyone? Shubhodeep, Prashant, Shreya. Which one is correct? Quickly. Okay, let me tell you the answer then. So, if you see, all of them All of them will be correct, right? So here your answer should be C. Answer should be C. All three are correct. Why all three are correct? Let's see. If you see these statements, first says, under GST law, exports of goods and services are zero rated. Yes, absolutely. I have told you specifically that under GST regime, exports of goods and services are zero rated, which is to say, it can be at the sales level or at the input level, which is to say, if you have said, say paid inputs or paid taxes on inputs for goods which you are producing to be exported, that will be given back to you, credited back to you as input tax credit. There is a provision of ITC we have discussed in our classes, right? ITC, input tax credit. So even if you have paid taxes on inputs used in production of those goods which are to be exported, remember, not for the domestic use. Clear? So such payments, such taxes will be credited back to your account, which you can use further for your GST liabilities. Getting my point? So that provision is known as input tax credit. Tax paid on inputs will be credited back to you. Since GST is also tax which follows value addition structure, it is not an output based tax like India had the regime earlier one, okay? So GST is properly value added tax. We are taxing the value addition process, not the inputs. We are not taxing what you have paid on inputs, what you have spent on inputs. We are just taxing under GST regime what you have added, the value, how much value have you added to that good in your process of production. So it is levied on the value addition only. That's why input tax which you have paid is given back to you, because that is your cost. Although it will get reflected in the final price MRP of the product, because the producer has to cover the cost. But the producers under GST are provided with ITC, input tax credit. The tax which you pay while purchasing inputs, for GST which you pay while purchasing inputs, if you are a producer, that will be credited back. Okay, and particularly for exports it is zero, so you need not pay any GST on exports. That is a true statement, right? Second, all imports shall be deemed to be interstate supply. Yes, GST Act says that, you know, IGST will be levied on say interstate supplies. So if we talk about imports for that matter are deemed as interstate supply. They are considered as interstate supply. Hence, imports under GST regime attract IGST, which is your integrated GST. Remember, okay? So integrated goods and services tax shall be levied in addition to basic customs duty. Yes, that is true, right? Third statement, CBIC, as you all know, Central Board of Indirect Taxes and Customs, is the nodal department for this matter, who levies, formulates all these indirect taxes. And for the direct taxation one, you have the Central Board of Direct Taxes, CBDT, right? So you have these two boards, CBIC and CBDT. CBIC for indirect taxes, CBDT for direct taxes under your Finance Ministry, Department of Revenue. You should remember these facts, okay? So all these are correct, hence your answer should be C, all three, right? C. As you can see, the explanation is also given here. If I discuss the explanation with you, the Central Board of Indirect Taxes, Customs, Department of Revenue, Ministry of Finance is responsible for formulation of policy relating to levy and collection of your indirect taxes. I have already told you the difference between indirect taxes and direct taxes. Indirect taxes are those for which the burden can be shifted to some other person. Burden to pay the tax can be shifted. For example, the producer pays tax in process of producing something that gets collected from you under MRP. That burden is shifted to the consumer, isn't it? But in case of direct taxes like income tax, corporate profit tax, etc., the person on which the tax is levied that person only has to pay the tax. That burden cannot be shifted. So this is the difference between the structure of an indirect tax and a direct tax, right? So this is the thing. Then import of goods. The import of goods has been defined in IGST Act 2017 as bringing goods into inside India from a place outside India. So it is considered as interstate supply for that matter. All imports shall be deemed as interstate supply, and under GST structure, interstate supplies come under the IGST head of GST. Okay. So accordingly, IGST, which is your integrated goods and services tax, shall be levied in addition to basic customs duty. Custom duty, when you import something, we impose a duty which is custom duty. So in addition to this, IGST will be levied. Remember, not in place of basic customs duty, but in addition to basic customs duty. Clear? Okay. Now, extra information for you which you should remember. In addition, GST compensation cess may also be leviable on certain luxury and demerit goods under goods and services tax. Okay. So cess is what? What is the difference between a tax and a cess? Cess is basically, you know, a kind of tax for a special purpose, right? If you have heard these terms, surtax, surcharge, cess. So surcharge is basically tax on tax, but cess is levied as a tax for specific purposes. Like here, you want to import less of demerit goods which are not good for the health of the economy, like weapons, okay, all these things. So demerit goods can attract cess. So cess is levied for a particular purpose. That can also be there under GST in addition to all these existing things. You should remember. Then in cases where imported goods are liable to anti-dumping duty, or safeguard duty, value for calculation of IGST as well as compensation cess shall also include anti-dumping duty amount and safeguard duty amount. You know, there are certain safeguards provided to our domestic producers when we import the goods and services. What is dumping? So anti-dumping duty can also be imposed in addition to all these IGST, basic customs duty. This value will also be included in that if the good is required to have anti-dumping duty. What is dumping? Dumping is in economics, if you have in trade, in terms of trade, if you have heard dumping means when, you know, there is a country who is exporting something, right? So understand, this is very important terminology. What is dumping? Dumping. Say there is a country X, okay, this country is exporting certain goods to country Y. Now this country exports this to country Y at lower prices which are lower in this country, but the prices of the same product are higher in its own domestic market, Remember, so what is dumping? When a country tries to export good at a very low price in another country to dump it, basically to capture the market lower than the price which is prevailing in its own market. Okay, so that is, you know, something which is not favorable for our producers. You are selling it at the same price in your own country, higher price, but you are selling it at a lower price in our country, which will sweep out the market. Our competitors, our domestic producers will not be able to sustain that competition, that huge cheaper price, okay, because they have to cover their costs. So you will wipe out our producers. In that case, to protect our domestic producers, government imposes anti-dumping duty on these products. So in that case, government imposes anti-dumping duty. Now I think it would be clear. So GST, under GST regime, these goods can have anti-dumping duty as well in addition to IGST, basic customs duty, etc. So this is the thing which you should remember. Then exports of good, 0 rated. Exports are 0 rated under GST. This is a statement which you should have a very clear imprint in your mind. Getting my point? Exports are 0 rated under GST. Remember this thing. One more thing, always remember, GST is a destination or consumption based tax, not output based tax. It is not levied where the good is produced. It is levied where the good is supplied or is consumed. Clear? So it is a destination based tax. So this is your GST model. Just a quick overview of the GST model so as to give a glimpse of GST to you, all those who don't know GST structure. So for supply of goods and services within a state, say there is a state, say Rajasthan, okay. So if the good is produced and supplied within Rajasthan, that would be intra-state supply. In case of intra-state supply, the GST which will be levied is your CGST, central government will impose its tax, plus SGST, that state government, Rajasthan government will impose the tax. So intra-state sale of goods and services, CGST plus SGST will be levied. For supply of goods and services within union territories, there is a union territory, okay, any of your union territories you can say, in that particular UT, it is produced and sold within the UT, that would be intra UT or intra state for that matter. Again, CGST will be levied, and in place of state you have UT, so we call it UT GST. So that government of the union territory will collect it, plus central government will also collect it. Okay, is this clear? Now, in case of interstate supplies, okay, if we talk about interstate supply, say some good which is produced in Maharashtra is sold in Gujarat. So as you all know, it is a consumption based tax, okay. This is interstate supply, so it will be levied, the IGST will be levied here, integrated GST. Now, will states have share in the IGST? Yes, although it will be decided and levied and collected by the center, IGST, but center will share its proceeds with the concerned state. Okay, clear? So here you have Maharashtra and Gujarat. So Gujarat is the destination state, okay. So the share will be collected with the concerned state as well. Clear? So this is the broad structure of GST which you should remember. And as you all know, that 101st Amendment Act in the Constitution brought you, 2016 brought you this GST Act, which became effective in India from 1st July 2017. Okay. So this was about GST. I hope you found it useful. Question number 5. Which of the following is correct regarding GST Council? Again, very important section. UPSC has asked questions regarding GST Council, regarding Monetary Policy Committee as well, repeatedly. Not like this asked only one time and then never repeated. No, they are the prospective areas from where you can see questions in new forms. Okay, so try to answer this question regarding GST Council. It is very simple. Finance Minister is the chairperson of the GST Council. For every decision of GST Council, 75% majority is required. States have 1/3 weightage in the vote shares, while center has 2/3 weightage in the voting of GST Council. Now tell me which above them are correct. So you have to give the correct answer only. Yes. So which one is correct? 1, 2, 3. Answers please, quickly. 1 and 2 are correct, you are saying. 1 and 2 are correct. Okay. Good. Any more answers? I am waiting for your answers. Which above these statements are correct? Okay, so let's see. The first one, Finance Minister is the chairperson of GST Council. Yes, absolutely. So GST Council is chaired by your Finance Minister. Okay, for every decision 75% majority is required. Yes, and 50% quorum is there. Okay, 50% of the members of the council have to be present in order to have the meeting valid. Getting my point? This is quorum. Quorum is what? What minimum numbers of members are there required to be present to continue the meeting. for the meeting being valid. Okay, so quorum is 50%, majority to pass a decision is 75%. Okay, this is something you should be worried about. States have 2/3 weightage, not the center. Clear? So in voting this is wrong. So effectively your answer should be, how many of these statements are correct? Your answer should be B, only 2. Only 2. So here third statement is incorrect. States do not have 1/3 weightage in the vote shares. State have 2/3 weightage. Okay. So first of all, also remember, since we are discussing these questions for UPSC has a keen interest in asking you sources of the councils, organizations or anything, right? If you have seen the previous year questions of 2023 particularly, 22, 23, 21, all these years, you will see that, you know, they have asked according to constitution this. According to constitution this that. Okay, so they also ask you source. They try to ask you whether a body which is there in the question is constitutional or is it statutory. Getting my point? So the body or organization established by constitution or amending the constitution is your constitutional body. The organizations or committees or bodies, all of which you have, which derive their power from a statute, a parliamentary law, is your statutory body. So remember these differences. UPSC has a very keen interest in getting you confused that which the body given in question is constitutional or statutory. They have done this a lot of times, I am telling you. Okay, so remember, be very cautious while referring to the source of that organization. Okay, so here the sources, if they ask you GST Council is a statutory or constitutional, so you have proper constitutional provisions for GST, Article 279A, which you should remember. So Article 279A, you should remember. 279A requires council to make recommendations on the union and states on important issues related to GST. So all your decisions related to GST are taken by GST Council. Okay, rates, revising the rates on certain products, GST rates happens by GST Council. Clear? So what gives the authority to GST Council for doing all these things? Article 279 clause A. Remember this. Okay, then chairperson is your union finance minister, of course. Vice chairperson is to be chosen amongst the ministers of state government which are there, okay, which are members. So one of them will be chosen as your vice chairperson. If we talk about the members, so one is your finance minister, is your chairperson. Minister of state for finance, minister of MOS, minister of state for finance will be your member, plus all ministers of finance or taxation departments of every state and UT. Clear? So, you know, when we see this provision of GST Council, it reminds us of something called as cooperative federalism. Cooperative federalism. Cooperative federalism. When in the growth prospects, your every unit of administration has a large say in the decision making. So they are providing opportunities to all states to represent themselves in the decisions of GST Council, right? Then if we talk about further features, quorum is 50%, as I told you, minimum 50% of the total members required to hold the meeting. Decision will be taken by 75% majority of the votes. Clear? So this was regarding. Now that statement which I told you is incorrect, because states shares in voting is 2/3 weightage. A state's share has a 2/3 weightage and center has 1/3 weightage. So states have more weightage as compared to center. Again, cooperative federalism, right? So you should relate all these concepts, these facts with the political concepts as well. Since you are preparing for UPSC, everything is integrated. You have to have an interdisciplinary plus multidisciplinary approach while approaching this exam. Okay. So this council only makes recommendations on everything related to GST, decided by GST council only. Clear? So this was the question and all the explanation and related facts. I hope you are finding it interesting. Yes or no? I'm not getting any responses as compared to other classes. You are very interactive in editorial and all other classes, right? So I hope you are able to understand these questions, right? Okay. Now, question number 6. Which of the following is correct regarding GST collection in India? So again, question related to GST but somewhat different. It is regarding GST collection. Earlier one was GST council. So first statement is IGST has the highest share in total GST collection. CGST has the lower or lowest share in GST collection, or the average monthly GST collection is more than 1 lakh for all these financial years. Financial year 2022, 2023 and 2024. Which above them are correct regarding GST collections in India? Which above them are correct? So, IGST has the highest share. Any answers? I am waiting for your responses. You want to tell me the answer? Which of them are correct? Okay. Alright. So first is correct. IGST has the highest share in total GST collection. Okay. CGST has the lowest share in total GST collection. Yes, it is lower than the SGST. Okay. And average monthly GST collection has been more than 1 lakh crores in all these financial years, 22, 23, 24 if we talk about. Right. So effectively your answer comes out to be all of them. So your answer should be C. All three. C is the right answer. All of them. Okay. Let's see the explanation. IGST has the highest share in total GST collection. You should remember these trends can be asked. Okay. CGST has the lowest share. Yes. SGST is more than CGST. Right. Average monthly GST collection, if you see 2022 more than 1 lakh crore, 1.24 lakh crores say. Okay. 23 again more than 1 lakh crores, 24 again more than 1 lakh crores. Reasons you should find out why CGST is lower than SGST. These two should be equal. Okay. There are in tax collection by center and states, there are discrepancies. Okay. Right. So there are a lot of reasons which we can discuss, but today we have to complete these questions. I will address this question in some other classes. Maybe you should try to find out. So as compared to IGST and SGST, CGST have lower tax collections, right? Because you know states were demanding more compensation and all these things when GST was to be introduced. So states revenue collection has been taken care of. Just this line I can say, right? Okay. Clear? I understand your question, because if there is say 5% GST, 2.5 is from CGST, 2.5 is from SGST. That's why you are getting confused. So you should try searching the answers to these questions. We can discuss them in any of the classes. Alright. So is this clear to you all? Answer should be C. All of them. All of them. Okay. These are correct. Moving ahead with the further question. Okay, yes. One more information. Maharashtra leads in total GST collection. This is very important. If we say which state is leading in total GST collection, overall India is generating a lot of revenue from GST. So top 3 sources, if you ask me, top 3 sources of revenue, tax revenue collection from India are GST, income tax and CPT. So they keep on changing the ranks 1, 2, 3, but they are always among the top 3, either 1, 2 or 3 rank. Okay. So your income tax, your corporate profit tax and your GST are contributing the max to the government coffers in terms of your tax revenue generation. Clear? And Maharashtra, the state of Maharashtra has the or leads in the total GST collection, has the highest GST collection. Clear? Alright, moving on to the next question. Which of the following is true regarding trade remedies? Again, now trade remedies are these safeguards provided to your domestic economy, domestic producers, to fight against these unfair practices of dumping and all, right? So this is related to them. Let's see the questions. First statement says, anti-dumping duties are levied on goods that have received government subsidies in the originating or exporting country. Read these lines very carefully, very easy, but you try to answer this question, okay? Second statement says, countervailing duties are imposed to rectify the situation arising from dumping of goods, where a country exports goods to another at prices lower than its home market. Third says, Director General of Trade Remedies, DGTR, Director General of Trade Remedies, is the apex national authority under the Ministry of Commerce and Industry responsible for administering all trade remedial measures. Which of these statements are correct? Tell me quickly. Yes, anyone? Nilesh, Abhishek, Shreya, Prashant. Tell me the answer. Very recently I told you what is dumping, anti-dumping duty, right? Any answers, please? You are saying 2 and 3, B. Okay. Okay, you are saying 2 and 3 are correct. Let's see. Any more answers? Any more answers? No? Okay. I'll tell you the answer first. Just wanted to discuss something with you. Not discussing about the answer. I'm telling you, if you want to mark my words, okay, mark my words. If you want to clear UPSC CSE Prelims, knowledge is not enough. Knowledge is not enough. Remember, okay. Do not now focus on what am I saying to you. If you want to have you clear this examination, okay. Since I am telling you, UPSC is not difficult due to lack of knowledge. No. Everyone has access to sources which have, flood in the market. You have flood related to sources of UPSC in the market. Agree or not? So resources is not a limitation. Knowledge is not a limitation. Everyone knows everything which is there. There is a cutthroat competition. What makes the difference? What makes the difference is your presence of mind, common sense and elimination techniques. Remember, okay, common sense is the most sharp weapon which you can use in your prelims examination. Questions are very general. We only complicate them. What we do is we try to overthink that, okay, this question has been asked in UPSC, it should not be this much easy. No, you have to look what is happening around you. Try to relate your common sense, the knowledge which you have, the general understanding of your environment, your surrounding which you have with that question, because questions are different. Yes, I agree. They do not ask something which is there directly written in your sources, your books which you refer to. Getting my point? They ask something really very different, but you can answer those questions and you have to answer, because if you don't increase your attempts, you will not be able to find your answer in the list, in the selection list. But why? Because negative is also there. Negative marking is there, and howsoever expert you are, how much expert you are in the GS subjects does not ensure your accuracy in prelims. Remember, you take it for granted that at least 25 to 30 questions are going to be wrong irrespective of your experience in this field. Getting my point? These are some insights from my experience I am telling you should remember. It might be helpful for you apart from these questions. Getting my point? Common sense is the most sharpest tool which you can use in your paper. This is not merely an exam of your knowledge. No, it tests your presence of mind. It tests your common sense. And you have to be smart enough. You have to go with this mindset that I am going in the exam. I know this, that questions will not be from what I have read, but I have to attempt them so that you can sink in the shock and then try attempting the question paper. Are you getting what am I trying to convey to you? Yes or no? You have to act smartly, you have to approach the questions smartly, you have to use elimination techniques as well, you have to use a common sense, presence of mind. All these combination apart from knowledge, including knowledge, will ensure your selection in prelims. Remember these, you mark my words, after the examination you will realize this, that it was correct, okay? Have you understood what I am trying to convey to you? I hope so, okay? Now coming back to this question. So your answer should be only 1, because you know these are interchanged. These are interchanged. If you see the previous year paper of UPSC, they do this generally. When the question is regarding definition of something, be very cautious. They interchange the definition of two things. I am telling you, right? Like anti-dumping duty is not levied for the goods which have received subsidies. It is the countervailing duty, and the definition of countervailing duty is given above. The definition of anti-dumping duty is given below. So these are interchanged. These two statements are wrong here. The third one is correct. Third one is correct. So first is anti-dumping duties are levied on goods that have received government subsidies. No, anti-dumping duties are levied on goods which are being dumped in your market. As I told you, what is dumping? That you know, an exporting country is exporting product in your market as at a lesser price in comparison to the higher prices prevailing in their own domestic market. So in that case, anti-dumping duty will be levied. But what is countervailing duty? Try to understand this. Very important terminology. What is countervailing duty? Say there is a country, okay, country X. It is exporting a good on which government has provided some subsidy, on the production of which government has provided some subsidy. So when government provides subsidy, your cost of production gets reduced. Say on inputs, say fertilizers, pesticides, chemicals, machinery used in the production are attracting government subsidies. So effectively, your cost of production will get reduced. When your cost of production gets reduced, you will be able to sell that product at a lesser price as compared to your competitors. Yes or no? So that country will be able to sell that product at a lesser price in your country. For example, your country is not providing subsidy on the same product, so it will be costlier in your country. Now when that product enters in your market, consumers have two choices: to purchase the cheaper one, imported one from the country which received subsidy on that production from the government, and the domestically produced one on which your government did not provide subsidy for any matter, so it is costlier. Which one will you choose? The consumer has a mindset of choosing for the going for the lesser price always. Consumer theory, common consumer behavior, isn't it? So this is how it destroys your market. To rectify this, to negate that effect of subsidy on that good coming into your market, government imposes countervailing duty to make it at par with the prices going or prevalent in your domestic market. Did you understand that? Yes or no? So that duty makes it equal to the market price prevailing in your market, so that you have fair competition. Right? Understood? So these are interchanged. Third one is correct, that Director General of Trade Remedies is responsible for this. So now the question is asking you the correct answer. The correct answer should be A, which is only one. Only one. Which statement is correct? Only this one is correct. Director General of Trade Remedies is the apex national authority to administer all these trade remedial measures. They are known as trade remedies. Clear? So this is the question. Now question number 8. I have told you what is countervailing duty and what is anti-dumping duty, right? I hope you have understood these concepts. They are very important for any of the examination, be it UPSC, SEBI, NABARD, RBI, any one of them, or any other examination, right? Now next question. Which of the following is true regarding appreciation and depreciation of INR? Tell me. INR appreciation may result in lower import costs, which can benefit companies dependent on imported raw materials. Okay, I have explained to you how currency appreciation and depreciation helps in imports and exports, right? So you should be able to answer this question. First statement is this. Second statement says INR, Indian National Rupee, depreciation can benefit export oriented sectors by making their goods and services more competitive in the international markets. Then the question which we have is, if INR is rapidly depreciating against dollar or against any currency, then RBI will sell dollars in the market to stabilize the INR. Which one is correct? Which one is correct? Tell me. Any answers? I am waiting for your responses. Which of them is correct? Tell me the answers. All three correct? Okay. Any more answers? So you are saying all of them are correct? Yes. Answer is C. Very good. All of them are correct. Okay. Let me explain you. Let me give you the explanation. All these three statements are correct. First, second, third. First is saying INR appreciation. INR is our domestic currency. Okay. Currency appreciation. If your currency is appreciating, first of all, what does that mean? Say if $1 earlier used to be 70 rupees. Now if $1 is only 60 rupees, that is currency appreciation. You have to give less of your domestic currency to purchase 1 unit of foreign currency. Right? So it is appreciation. We are saying that currency appreciation will help imports. Yes, I have told you number of times that when your currency appreciates, the importer gets benefited and it is a loss to exporter. Getting my point? Why? Because see, earlier you had to give 70 rupees for $1. Now you only have to give 60 rupees for $1. So you have to give less for buying something from outside, which is your import. For importing some raw materials, some inputs for your production, for your factory, for your company. Got this point? So effectively, import cost gets reduced. You have to give less for the foreign currency. To convert it into the foreign currency for that matter, you have to pay less. So your cost has reduced. So it is beneficial for the importer. It is a loss to exporter. Why? Because currency depreciation is something which helps exporter. I'll explain to you. Okay, so currency appreciation, benefit to importer, loss to exporter. Why loss to exporter? Exporter is doing what? Exporting. What is export? Foreign demand of your domestically produced goods and services, right? So when, say earlier, a foreigner was able to purchase goods of worth 70 rupees by giving $1. Now the same person will be able to purchase only goods of, say, goods worth rupees 60 for $1. They will demand less because now their $1 is able to purchase less of your goods as compared to earlier. That is why currency appreciation is harmful for exporters while beneficial for importers. Clear? Then second statement, INR depreciation can benefit export oriented sectors. Yes. Okay. Now, depreciation. What is depreciation? Understand. Earlier, say you had to give 60 rupees for $1. Now you have to say give 80 rupees for $1. This is your currency depreciation. The value of your currency has depreciated as compared to the foreign currency in question, say US dollar. Okay. But it is helpful for exporters. Why? Now $1 is able to buy goods and services of worth rupee 80. That would boost demand for your products. They are able to buy more with the same amount of money, isn't it? So your exports will increase. It will be incentive for the exporters. Got this point? Also, if INR is rapidly depreciating, then RBI will sell dollars. Yes, this is something called as managed floating. See, you all know that presently we have flexible exchange rate system, right? The exchange rate is decided by the demand and supply of the foreign currency or the currency in question, right? So demand and supply decide the exchange rate, but sometimes our authorities like the central bank, the government of India, try to stabilize our currency so as to prevent our currency from economic shocks, and that activity done by RBI is known as managed floating. Known as managed floating. Managed floating, okay, in which depending on the situation whether currency is depreciating or appreciating, the RBI, since RBI has forex reserves, so it sells or purchases the foreign currency to stabilize our currency. Now here it is saying, say if INR is rapidly depreciating, that means your domestic currency is becoming weaker in comparison to foreign currency, say in comparison to dollar. RBI will sell dollars. Yes, selling the dollars in the market will increase the supply of the dollar. When supply of the foreign currency increases, demand remaining constant, price will fall. So exchange rate will fall, which will stabilize your depreciating rupee. Let me explain it through this diagram. Here we have exchange rate, okay. Here we have supply and demand of dollar, okay. So now say this was earlier demand 0 as 0. Earlier equilibrium was this, say 80 rupees for $1, okay. Now if RBI, now since it is higher, okay, it is depreciating, RBI sells dollars in the market, so supply, this is supply and demand of dollar here, foreign currency, okay. Supply will increase, supply curve will shift towards right. Supply increases, new equilibrium arrives here, which is lower than this exchange rate, which can be 70, 60. So rupee has stabilized, isn't it? This is managed floating. This is how RBI does that. Clear? So we intervene sometime, although the entire thing gets decided in the free market mechanism by demand and supply. Getting this point? So all these three are therefore correct, right? Now, there are two terms here which I want to share with you, okay, before moving on to the question 9, before moving on to question number 9. First thing, when deliberate depreciation is done, it is known as devaluation. When deliberately the authorities of the country trying to depreciate their currency, why? To boost exports. Right? This is known as devaluation. When deliberate appreciation is done, it will be known as revaluation. So remember the difference between depreciation and devaluation. Depreciation by market, devaluation by authorities. Deliberate depreciation. Appreciation by market, deliberate appreciation by authorities, which is revaluation. So remember these terms, okay. Also there is something related to this, sterilization, okay. You should remember, you should read about sterilization and market stabilizing scheme, okay, all these things. So you should read about sterilization. This can also be asked. All these are related concepts. Since we have time constraint, I cannot explain you everything, otherwise it is a huge chapter. So I am just giving you hints that you can read about these topics as well. Although they are mentioned in your explanation, you can refer to this PDF also. Right? So read about the sterilization, devaluation, revaluation, all these terminologies are important for you for any exam provided with UPSC as well. Yes, it is currency manipulation, but that is done by central banks and governments all over the world to manage their currency's value, right? Okay. Now, question number 9. Which of the following is true regarding monetary policy operations? So now we have something of monetary policy of our zone, right? So It is very easy. I hope you all understand what is monetary policy. Right? Now, you have given the answer. Question number 9. Very good, very fast. Let me read these statements first. The operating target of monetary policy is weighted average call rate, which is a volume weighted rate of overnight transactions undertaken in call money market. Second, for absorbing liquidity, RBI will sell government securities through open market operations. Repo rate is direct instrument which immediately impacts the liquidity in the system. Which above them are correct? Tell me the answers. You all know about all these things. We have discussed WACR in our editorial as well. Weighted average call rate in RBI annual report as well. I have told you. What is it? Right? Tell me the answers. So, if you see this statement, operating target of monetary policy is weighted average call rate. It is true. It is true. What is weighted average call rate? I have told you that, we have broadly two types of markets. Okay, money market and capital market. Try to understand it like this. Money market, all those transactions for less than 1 year. Less than 1 year. Right? Capital market, more than 1 year. Maturity period more than 1 year, transactions for more than 1 year, all these things. So this is a basic distinction between money market and capital market. In money market, you have different tools for transactions. Okay, as common man takes loan from the banking system, banks also give and take loan between themselves, among themselves. There are something called as interbank transactions. For example, SBI giving loan to ICICI, ICICI giving loan to SBI. Clear? So this is your interbank transaction. Now, focus on what am I explaining to you. Interbank transactions are categorized into 3 categories. When those loans are given for 1 day, say 24 hours, that is known as call money. I have told you earlier as well. Call money. For 2 to 14 days, it will be notice money. Interbank transactions. Banks giving loan to each other among themselves, right? For more than 15 days, it will be term money. Call money, 1 day, notice money, 2 to 14 days, more than 15 days, term money. So this interest rate, weighted average call rate is your call money rate. It is the interest rate at which banks are transacting with each other, they are giving loan to each other. So interbank transaction call money rate for 1 day. I have told you what is call money, right? This is your weighted average call rate. Clear? So, yes, monetary policy targets this as well. So, it is a weighted average of your all interest rates related to your call money transactions, right? Why does monetary policy targets it? Because, it is also affecting the liquidity available with the bank. Bank can get liquidity from the RBI, which gets affected through repo. We understand that. But they are also lending among themselves. So, to monitor that liquidity and to make it align with the monetary policy decisions of the RBI, this is tracked and this is kept. Presently, it is higher than the repo. Presently, your weighted average call money rate is higher than the repo rate. Clear? So, this is the thing. Why? Because as you know that in the recent MPC meeting, RBI or the MPC has decided to stand by the status quo. To have the status quo, which is your withdrawal of accommodation, absorbing liquidity from the market, because our inflation is above the desirable bracket. So that's why it is also kept higher above the repo rate, so as to absorb the liquidity, excess liquidity from the banking system. Clear? This is true. Second, for absorbing liquidity, RBI sells government securities. Yes, this is what is called as open market operations. Open market operation is one of the quantitative tools of monetary policy available with the RBI. What RBI does that, it has government securities. To absorb or inject the liquidity, RBI sells and purchases those securities on the behalf of the government of India in the market. Now, when RBI sells the government securities, there are buyers, they will purchase it, like banks, mutual funds. Now, retail buyers are also there. Retail direct mobile app, retail direct scheme. Individual can also buy through JILT account, right? the government securities which RBI sells. So anyone can buy that. When you buy, you are giving money to RBI. So money is flowing from the economy to the RBI. It is absorbing the excess liquidity. So yes, it will sell it, right, for absorbing the liquidity. Third, repo rate is direct instrument? No. Repo rate is the most important instrument, but the transmission of repo decision takes time. No, MPC targets repo rate and all other rates, but RBI also targets monetary policy, also targets this one. It is very closely linked to your repo, and presently if you see, it is kept higher than repo to transmit the decisions of higher interest rates taken by MPC. Clear? This one is incorrect because repo is not a direct instrument. It is, you can say direct, but the impact is not very immediate. Repo rate, changes in repo rate takes time to be implemented in economy via monetary transmission. Banks will adjust their interest rates. Further, that will pass on to the customers. Are you getting my point? So then what is the direct which can have direct impact on the liquidity and direct impact on the economy? It is CRR, cash reserve ratio. So third is incorrect. First and two are correct here. So your answer for that matter should be only two, which is B. Yes, B. Okay. Now if you see, I have explained the first and second statement to you. This is the answer of third one. CRR is a direct instrument. It immediately affects the system liquidity. What is CRR? Cash reserve ratio. So there are two reserve requirements, right, which the banks have to keep with the RBI and with themselves. CRR is cash reserve ratio. It is certain percentage of the NDTL. NDTL you all know by now, okay? You all know what is NDTL, net demand and time liabilities. All the deposits which bank have, basically saving, fixed, current. So all the deposits which bank have, NDTL, out of those deposits, certain percentage is to be kept with the central bank in form of cash, which is your CRR. You cannot use that. That is obligatory. If you do not do that, penalty is imposed, right? You have to do that. Other one is SLR, statutory liquidity ratio. Same, certain percentage of NDTL has to be kept, but in three forms. It can be kept in cash, in gold, as well as in government securities with the bank itself. Although you cannot use it for lending activities, but you have to keep it with yourself. Clear? So this is the difference. Now when CRR is reduced or increased, it directly affects the liquidity of the bank. Say if CRR is increased, now bank have to keep more funds out of the total deposits with the RBI, so it cannot lend out of those funds. So its lending activity will be directly impacted during inflation. Getting my point? That's why you see during higher inflationary phases, CRR is increased by the RBI. Clear? So that bank have lesser to give loan into the economy, and that's how money supply will get reduced. Understood? So this is why third will be your incorrect one. This was your explanation. You can read all these things, extra information in your PDF. Now, have we discussed question number 10? Which one was this? Okay, this is the question number 10, right? Question number 10. Monetary Policy Committee's failure to achieve inflation target is defined. When do we say that Monetary Policy Committee has failure in achieving the inflation target? You all know, I'll discuss liquidity corridor with you as well in the coming classes, maybe upcoming classes. We have parts of this class, right? So presently it is already too long for this class. Let me discuss this question first. What is inflation target of India? Tell me. 4 plus minus 2%, right? So when do we say that MPC has failed to achieve this target? When do we say that? It is particularly defined, okay? It is defined properly. So average inflation is more than upper tolerance level, which is your 6%, right? Of the inflation for any 3 consecutive quarters. Average inflation is less than the lower tolerance level, which is your 2%. okay, for any 3 consecutive quarters, or when average inflation is less than lower tolerance level for any 2 consecutive quarters. So 1 and 2 here are your correct statements. Yes, very good, Amit. 1 and 2 are correct. Third one is wrong. It is for 3 consecutive quarters, right? So when your inflation, average inflation breaches maximum limit 6% for 3 consecutive quarters, it will be a failure. When it falls below the minimum threshold, which is 2%, because inflation has to be there. You all know inflation is necessary for growth. I have already discussed it with you in previous classes, right? So for 3 consecutive quarters, if it is less than the lower limit as well, then also failure, right? Okay, so here if you see, the answer should be 2, and which 2? 1 and 2 statement are correct. Yes, the answer is B. Answer is B. And as you can see, failure to achieve inflation target is defined. Average inflation is more than the upper tolerance level for any 3 consecutive quarters, or average inflation is less than lower tolerance level for any 3 consecutive quarters. So remember, 3 consecutive quarters. Okay, that is known as failure in maintaining the inflation target on the part of RBI or on the part of Monetary Policy Committee. Okay, so, and one more thing, this inflation which is there, we target the inflation targeted by MPC is based on your CPI, Consumer Price Index, not on the basis of WPI, remember. So inflation which is concern for us, concern for RBI, is your CPI based inflation, right? Okay, so I will pause here only for today. In the next class, we will be doing from question number 11. You keep on revising these statements, you read these document explanations. I have explained you every concept which is there, okay, right? But due to time constraint, we were able to discuss 10 questions today. I'll take up more questions. I'll complete this series of 80 most important questions for you in parts, okay? And I hope this is useful for you. I have tried explaining the concepts as well. So just read these concepts, remember these trends, try attempting these kind of questions, and then they will be useful for you. No, we will discuss this question later, okay? So we are done till question number 10. From question number 11, I'll be taking up in the next part of this series, alright? So I hope it will be very helpful for all of you who are appearing in the CSE examination on 16 June, or for all those who are not appearing, it might be helpful for any other examination, right? So thank you so much for staying tuned for so long, staying focused, and I wish you good luck for the exam. We will be doing the remaining parts of this series, okay? We will complete it, and have a very great day. I'll see you in the next classes, next sessions. Thank you so much.